Good morning. This is Horizons Middle East and Africa, our top stories this morning. Traders look ahead to this week's U.S. inflation print after a weak jobs report boosted bets of a Fed rate cut this month. Drill, baby, drill. OPEC-plus defies doomsayers with another oil production boost, a move signaling the alliance's commitment to reclaiming market share ceded in recent years to rivals. And Japanese stocks rise while the yen drops as investors brace for Shigeru Ishiba's departure and the race to succeed him as prime minister. It's just gone 8 a.m. across the Emirates. I'm Johanna Bersachi in Dubai. Well, so much news over the course of this weekend. We're going to do our best throughout the next 60 minutes to break through some of the big headlines and give you the more context, as we always do at Bloomberg. But maybe let's just start with the big one on Friday, which, of course, was the jobs figure coming through from the U.S., a downside surprise. Once again, the 3-month average gain now for jobs growth in the U.S. is something like 22,000 jobs, very weak versus where we thought it was a couple of months ago before those revisions came through. And so we did see a dip for Wall Street yesterday. Today, things are stabilizing somewhat. We've got S&P futures just shy of 6,500, leaning towards the green, as the next thing to watch out for are going to be those CPI numbers later in the week in the U.S. as well. And perhaps if we do get a downside surprise there, then maybe a 50 basis point rate cut could be on the table. We'll discuss that with our guests shortly. 10-year yields, huge rally after the week number came through. We went down about 10 basis points in yield terms. Today we're up 2.5 basis points. But the point is, the curve, once again, is steepening because you saw 2-year yields move a lot lower, but then you also saw a massive repricing in 10-year and 30-year as well after that disappointing print. Brent in focus. And look at the reaction today. Up 1.2%. This is despite the fact that OPEC-plus, a group within OPEC-plus, decided to increase production once again, bring extra barrels to the market to the tune of around 136,000 barrels a day. But interestingly enough, the reaction in the oil market has been positive, and perhaps because we sold off so heavily into it last week, it's a case of, once again, buy the rumor, sell the fact. We're going to talk more about that on the show. And then Euro, also all eyes today on the French government confidence vote. They are likely to fail. And so, once again, pressure on the President Macron to select a new prime minister and the possibility, maybe, of even new parliamentary elections. So all of that is happening. But also, let's check in on how some of these markets in Asia are faring. Yvonne Mann is in Hong Kong. Again, there are lots of news, too. You have Japan news that Prime Minister Ishiba stepping down. Then you also had those China trade numbers to piece through as well, Yvonne.
That's right, Jemana. We'll talk about Japan first, because if you take a look at the markets, it's almost like what political crisis, right? Reports that Ishiba is going to be stepping down, and yet equity markets are heading higher. There is a sense here that maybe whoever does succeed Ishiba is still going to be at a weaker hand here. And does that in some way lead to more fiscal spending? Does it lead to the BOJ to delay its rate hike? So the narrative is maybe that the next leader is going to be slightly more dovish, and maybe that's a good thing for risk assets as well. That's why you're seeing Nikkei 225 up 1.5%. The yen substantially weaker here this morning, here at 148.20 levels. And we are seeing still some pressure on the long end of the yield curve in the JGB markets. We're up 1 basis points at 325, near those record highs for that 30-year yield. So certainly the fiscal concerns still remain. That's why we're still seeing that steepening in Japan here today. You mentioned those trade numbers coming out the last few minutes or so. And it's interesting, right? When you take a look at exports, basically slowing down to a 6-month low. What contributed to that? Well, it basically was U.S. orders plunged for a 5th straight month, just given the trade headlines and the like. So certainly that is something that we're tracking very closely. So 5.5 was the estimate. We saw about 4.4% for exports. Imports are still quite slow. So just goes to show domestic demand is still looking quite weak in China itself. But needless to say, the market kind of brushes off a lot of these data as well, right? We've seen this kind of dichotomy between weak macro, equity markets still liquidity driven as well. But today we are seeing a bit of a pause in the Chinese markets. We're flat on the CSI 300.
Yvonne, thank you so much. Yvonne Mann in Hong Kong. Now over to Japan to talk more about the political developments there. Ishiba's resignation leaves the markets in limbo over Japan's fiscal direction, with long-end government bonds looking most exposed. At the press conference announcing his resignation, Ishiba spoke about Japan's trade agreement with the U.S. and efforts to get a better deal.
This agreement was achieved based on the government and President Trump's administration. It is with regret that our administration cannot fulfill our responsibilities.
Let's get out now to Tokyo and speak to Sherry Ann, Bloomberg's Asia Trade co-anchor. Sherry, I remember when the elections took place a couple of months ago, there was a lot of pressure back then, on Ishiba, perhaps to step down because of the very poor performance in the upper house. And he hung on. But it seems that this weekend he decided to call it a day, is actually yielding to pressure, stepping down. What happens next?
Yeah, he really preempted another vote that was expected today in order to hold an early election. That would have been a really strong rejection of his leadership. So what happens now is, when is the next leadership election? We're going to hear from the LDP on Tuesday about the new date. Local media have been reporting that it could be in early October. And of course, the key question is what happens to some of the issues that still remain in place for the Japanese economy, including, as you mentioned, those U.S. trade negotiations, because we heard it from Prime Minister Ishiba himself saying that the trade agreement with the U.S. was not completely over. We actually heard from President Trump reacting with surprise to Prime Minister Ishiba's resignation, saying that he liked the guy and that he was working well with Prime Minister Ishiba. We'll continue to watch who could be the next potential candidates. They seem to be very similar to the list that we saw back in September during the last leadership election.
And what's interesting is the market reaction. Yvonne was just walking us through it, and the fact that the Nikkei is actually up 1.4%. At the same time, not a lot of love still for long-end JGBs. What does the market reaction tell us about what investors are anticipating out of his successor?
It's really that expectation for more fiscal stimulus, right? I mean, Prime Minister Ishiba was known for being very fiscally disciplined, and it's unlikely that whoever comes next will be more fiscally hawkish than him. Not to mention that even if they were, the fact that they need to negotiate with opposition parties to get anything done just means that we might get more fiscal stimulus on the way. Also, because we have a weaker yen, those exporters have been leading the gains, and depending on who the market sees as potential candidates. For example, Sanae Takaichi, hardline conservative, has been against normalization of policy by the Bank of Japan. So could this mean more easy money? That has kept bank stocks, for example, under pressure today. And you mentioned those JGB yields. We have front-end yields down today, weaker Japanese yen. The expectation of more fiscal stimulus to come is really pressuring the long end. And we could potentially, of course, be seeing the Bank of Japan also delaying rate hikes. Although it's worth mentioning that we got the final second quarter GDP numbers today, surprising to the upside. Annualized growth of 2.2% instead of the preliminary 1% growth that we had estimated earlier.
Sherry, thank you so much. So great to have your perspectives. Sherry Ann from Tokyo this morning. Well, the weak jobs print out of the U.S. practically cemented expectations that the Fed will resume cutting interest rates this month to support the economy. In fact, there's about 28 basis points priced in, so a little more than one full 25 basis point rate cut. Let's bring in Carole Sokhn, Signet Capital Management investments head. Really good to have you with us on the show. So another downside surprise with those jobs figures on Friday. What did we learn about the state of the U.S. economy?
So yes, the markets were surprised by the job that has been less creating.
Job creation,
less job creation. So we had 22,000 job only versus expectations of 75,000. In July, also the numbers were revised up at 79. Yeah. What's really striking is the fact that the U.S. economy has destroyed jobs in June. The numbers were revised down at minus 13,000. So unemployment also has ticked slightly higher at 4.3. What's worth really noting is the fact that the manufacturing sector, that's where you really find the most less job creation instead with the wholesale as well.
So what I find interesting actually is, well, you are seeing obviously an impact, but I wonder whether the more visible impact is coming from the Trump administration's crackdown on immigration or on the industries that are affected by tariffs.
I think it's a mix of both. I mean, we have seen this morning the news about the Hyundai corporate rate as well. So tariffs are impacting the job creation. Companies are cutting their expectations in terms of hiring because they have lots of uncertainty. I think uncertainty is the worst that you can have on the U.S. economy.
Do you think that the Fed might opt for a 50 basis point cut? We have an inflation print to get through this week. If it does surprise to the downside, could that pave the way for 50 basis points? I just said the market is now looking at 28 basis points.
Yes, so the market is now looking at more than one full rate cut for September, another 2 for the end of the year. There is a chance that the Fed is feeling compelled to cut by another additional 25, so a full 50 rate cut in September, because they might feel behind in terms of the curve. Now, these numbers, the CPI and the PPI, would be really, really important because markets are expecting the inflation to tick up, which is why we're having the long end of the yield curve moving up as well, close to 5% last week.
So far, stock markets have been pretty resilient. The S&P very close to yet another all-time record high, and we speak of still how so much of this boom has been powered by AI and AI tangent sectors. But I do wonder if the Fed have to opt for a 50 basis point cut because they're so worried about the state of the economy, whether at some point stock market investors will have to take note of that as well.
I think the equity market might go into a bit of a correction if the Fed does cut by 50. You have lots of companies, lots of countries who have pledged big investment into the U.S. This is yet to be seen. So the whole of the equity market is moved by these tech companies. So are they going to have enough profits to really move the market up? There is a big concentration risk on the U.S. market. So that's really something we want to watch carefully. We might have the fact that the economy is slowing down. That's really taking over the fact that the tech companies are pushing the market higher.
Yeah, if there is a pullback, would you use it as a buying opportunity?
Yes, that's an opportunity we will use to reposition our portfolio. We have gone with lots of cash now in our portfolio. We have been hedging in our portfolio as well since the month of March, expecting some kind of correction coming. The valuation are very high on the U.S. market.
What's the house view on the U.S. dollar? It just can't seem to get a bid here. And yet again, on the weak payroll print, we also had another leg down in the USD. What turns this around? So
the US dollar is really pushed lower by the loss of confidence in the US institutions in general. So obviously you have the Fed threats by Trump. That's very annoying, very puzzling for all the watchers. You have also the potential on the labor institution, also with the labor data that's going to be. Are they going to be really independently released, or are we going to have some loss of confidence also? All of this is pushing the dollar lower. And also this loss of confidence in the U.S. economy is pushing the gold higher. We have seen the gold going over 3,500, and that's becoming a new support now.
Yeah. It's so great to chat to you. Thank you so much for coming on the show.
Thank you, Jumana.
Carole Sokhn, Signet Capital Management Investments Head. Up next, OPEC-plus goes for more hikes. We discuss the group's decision to add 137,000 barrels per day in October with Edward Bell, acting group head of research and chief economist at Emirates NBD. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. OPEC-plus has announced an agreement for a modest production boost in October. The group says it would restart 137,000 barrels a day of output, defying warnings from Wall Street that the move risks compounding a supply glut. The alliance hopes that a further increase in sales volumes will offset any hit to revenues from lower prices. Joining us now is Edward Bell, acting group head of research and chief economist at Emirates NBD. So another production increase out of OPEC+. I've got to say, a bit of a surprise, even though the market is telling you something different this morning. But why do you think this group are so intent on putting extra barrels to the market, even though many analysts out there are warning about a potential supply glut in the fourth quarter?
Yeah, it does seem a little bit counterintuitive that you'd want to have the scale of production increases that we've already seen committed to from the OPEC-plus countries, and really just a collection of the OPEC-plus countries, that they're going to carry on doing that going into the rest of 2025. And actually, we think that's going to be the story for 2026 as well. But clearly, there is a decision that the kind of production restraint strategy, if that was aimed at supporting a specific price target, it really wasn't working. It wasn't having the desired effect, or it wasn't getting to a price that was going to be satisfying for all members across the group. So increasing output and increasing revenue, even if it means that there is a risk of prices testing lower, seems like the strategy going forward. And to be frank, if we look at the performance of oil prices since they've adopted this strategy over the last couple of months, oil prices have been fairly steady. We've had spikes up, we've had some touches on lower based on the sort of news flow of geopolitics or economic policy. But overall, the sort of mid-60s kind of range that we've been in has held fairly intact, with the scale of almost 2.5 million barrels a day that have been increased from about May until September.
Yeah. So they probably did sense more of a window of an opportunity to continue putting these barrels back to the market. At what point do you think, is there any price points where OPEC Plus will reevaluate? Is it low 60s? Is it high 50s? At what point will they say, okay, let's hold off putting these extra barrels back to the market for now?
Yeah, I don't know if there's a specific price level that it is, but if it's price action that looks really disorderly, if we have a major sell-off that doesn't look like there's anything that can put a floor underneath it, so if you have big downward moves day to day, 5 to 7%, then I think there becomes a decision to say, well, do we reevaluate? And if you look at the language of the OPEC Plus statements, they very much say that these are flexible targets, that they are willing to come in and change.
What do you make of the fact that Iraq over the weekend, the Prime Minister was calling for an increase in their own quota within OPEC? And again, you read a lot about there being limited spare capacity amongst the OPEC producers. How do you tie all of this together? Will there be a reshuffling?
Well, we got to think about, first of all, there's the market share for OPEC Plus against other oil producers around the world, United States, from South America, from Africa. And then within the OPEC Plus framework itself, there is this delicate balance of who gets the right allocations. And we've seen this blow up into tensions before, where it takes a long time to come to decisions about what kind of quotas are allocated to individual countries. So yes, there is this anxiety about, okay, we've had 137,000 barrels a day of an increase planned across those 8 countries. Not many countries are probably actually going to be able to deliver their share of that monthly increase. Saudi Arabia, most likely, UAE, and perhaps, Iraq or Kazakhstan, who have been increasing output in any case and probably want to have a bigger part of that pie going forward.
Yeah. Why do you think Saudi Arabia, who have obviously been leading the group also in terms of the voluntary cuts, have changed their strategy? And how much do you think that is on the back of perhaps some of the fiscal pressure that's coming through on Saudi Arabia right now as we speak about reprioritization, recalibration of plans? Do you think there is pressure to somehow increase the revenues that are coming into the States and therefore increase oil production?
Yeah, I think the strategy is twofold. One is an internal sort of OPEC plus disciplinary measure. Say, hey, if other countries are producing above their target, we're all going to increase output so that nobody gets the sort of extra benefit of capturing those higher priced barrels. But then also there does seem to be a view that rather than saying we need oil prices at $80 or $90, let's just increase our revenue wholesale and try and get as much out there on the market as possible, and that will help to bring in income. Now, we look at Saudi's project spending in a lot of detail. Already in place, there's about $450 billion of spending that is in execution already. That's not far off the size of Norway's entire GDP. So that's a tremendous amount of spending that's going on right now. And to meet some of the future spending plans, revenue is going to be a big part of it. Getting it from oil income is going to be a big part of that story. But also, look, we had a successful Sukuk issuance last week from Saudi Arabia. They do have other avenues to go out and raise money. Still a pretty low indebted economy for one that's that size, and also a big part of the G20.
Yeah. How do you see the rest of the GCC faring in an environment of mid-60s or low 60s oil?
Yeah, it's quite a lot of scatter shots. So for the UAE, we think it's a pretty comfortable position. Actually, we still expect to see, on aggregate across the UAE, a modest fiscal surplus. That's the degree of fiscal diversification that's been achieved in the economy. For the other markets like Kuwait, like in Oman, it is tougher because there's not quite the same scale of a diversification in the economy. Oil exports still a huge part of the fiscal and the export revenue story, so a little bit tougher there. But for the big, really dynamic economies with the UAE and Saudi Arabia, mid-60s a barrel, it's not ideal, it's not perfect, but it's also a very livable number for them.
So interesting. Really good to have you on, Edward. Edward Bell, Acting Group Head of Research and Chief Economist at Emirates NBD. Thank you. Now, coming up, Trump says he is issuing his last warning to Hamas to release all remaining hostages in Gaza. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in Dubai. U.S. President Donald Trump says Hamas needs to accept his terms to end its war with Israel. His post on Truth Social comes after Steve Witkoff, Trump's envoy to the Middle East, sent a new proposal to Hamas last week. According to Axios, the deal includes releasing all remaining hostages in exchange for ending the war in Gaza. But Hamas says it needs Israel to fully withdraw troops from the Gaza Strip before agreeing to peace talks. Trump says a deal could be coming soon.
Some things came up having to do with Hamas, etc., and we're working on a solution that maybe could be very good.
Can you tell us what that solution
No, but you'll be hearing about it pretty soon. We're trying to get it ended, get the hostages back.
President Donald Trump says he thinks Russia's war with Ukraine will be settled soon. The U.S. president reiterated he is not happy with Russia, saying he will be speaking with President Vladimir Putin very soon. It comes after Ukraine and its capital came under a massive Russian drone assault on Sunday, killing at least 2 people. Kyiv's mayor said these strikes hit residential areas of the capital, while several other buildings and cars also caught fire, including a government building. Hundreds of Turkish police forces blocked access to the main opposition's Istanbul headquarters on Sunday. Officials from the Republican People's Party decried what they described as a siege and called on supporters to gather at the party's Istanbul headquarters. The political turmoil has unnerved investors and led to a sell-off in Turkish assets, with an upcoming hearing on September the 15th against the party's chairman and his administration potentially leading to further uncertainty. And a quick look at equity futures, building on from, Wall Street saw some losses on Friday after that disappointing jobs print. But today, the theme is one of stabilization, with all of these indices, including European markets, pointed to open up in the green. And coming up, we discuss the impact of the French budget crisis beyond the confidence vote today. We're live outside the National Assembly in Paris. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Drill, baby drill. OPEC-plus defies doomsayers with another oil production boost, a move signaling that Alliance is committed to reclaiming market shares ceded in recent years to rivals. Japanese stocks rise while the yen drops as investors brace for Shigeru Ishiba's departure and the race to succeed him as prime minister. And we speak to Amira Sajwani, founder and CEO of PRYPCO, on the outlook for prop tech investments in the Middle East. It has just gone 8:30 a.m. across the Emirates. I'm Johanna Bersachi in Dubai. Well, another disappointing jobs figure out of the U.S. on Friday. Average jobs creation the last 3 months is just sitting at 22,000. So very weak compared to what we thought it was going to be, showing real signs that the labor market in the U.S. is cooling, and which also means that investors have upped their bets for how many rate cuts we're going to see this side of the year. Around 3 rate cuts are priced in, 27 basis points priced in for September. So some people out there are placing a small chance even of a possibility of a 50 basis point cut. And of course, we do get inflation data this week in the U.S. to watch out for lower as well. So that's going to be a key determinant of where we go from here. S&P futures, though, stabilizing. We're up 10 basis points. 10-year yields at one point we went down to about 4.07 on Friday. That is down from where we were earlier in the session, around 4.20. So big rally there, up this morning, 2.5 basis points. And then Brent, the energy complex, again, a lot of focus on what's been happening there, up 1.2% this morning. Buy the rumors, sell the facts. OPEC-plus, once again, the group of 8 have decided to increase production to the market to the tune of 137,000 barrels per day. So not as big a clip as they were doing over the course of the summer, but still more production, more supply going to hit in coming months out of OPEC+. And the reaction is Brent is up 1.2%. Euro, the currency, trading at 117, a tad weaker versus the USD, though the theme for the greenback has been one of weakness. All eyes today is going to be on the French confidence vote for the government. We're going to be speaking to our correspondent, Carole Sokhn, in just a short while about what to expect there. But let's move on and check in on how markets in Asia are faring as well. Yvonne Man is in Hong Kong. Yvonne.
Yeah, that weak jobs report in the U.S. really kind of solidified those bets that the Fed's going to have to cut next week, right? So that certainly is bringing some tailwinds to risk assets here and in Asia today. So you are seeing Asia slightly higher in the equity space here as well. China, though, taking a bit of a breather here today. But then we're also watching Japan, right? As we talk about the political instability, uncertainty in Europe. Well, Japan certainly is one with Ishiba set to step down. The equity market, though, taking it very, very favorably. You know, maybe the narrative is that there is going to be more fiscal spending. Whoever does take up the realm, and is the BOJ going to have to delay that rate hike that has been priced into this market? So we are seeing some substantial weakening in the yen here this morning. We're at 148 levels for the currency here. In terms of movers, plenty to talk to in China, despite, you know, things are looking pretty flat on the benchmark here. Take a look at how Hong Kong and some of these movers, Alibaba and Baidu, so some of these AI trades as well. We're seeing the stock up for Alibaba in particular after that AI model upgrade. So that AI trade is still living on here today. Country Garden up 8% here. We're talking about these property developers after Shenzhen joined other first-tier cities in easing those home curbs as they try to help the ailing property sector there. And we're watching Labubu's once again, PopMart. We're seeing the stock drop the most in a few months or so here. So there's concerns once again of Labubu and, you know, the demand picture there, how long this sort of fad can last. And then certainly now also PopMart has been added into HSI. And so maybe we're seeing a bit of profit taking in there on that front.
Yeah, just a note from our region, our part of the world. I was reading over the weekend that some UAE schools have banned for children to bring in their labubos to the classroom. So who knew it was going to have such an international impact on the stock as well, Yvonne? Thank you so much for the overview. Yvonne Man in Hong Kong. Okay, let's switch on away from the boo-boos. Let's talk about the turmoil in France, where Premier Francois Bayrou is likely to lose his job in a confidence vote today. But the real risk for investors lies beyond this and on what's to come over the coming weeks and months. France's inability to fix its public finances has led to 3 governments in little more than a year, inspiring little confidence in a 4th. For more on the political risks, we're joined by Bloomberg's Carole Sokhn, who is outside the National Assembly in Paris nice and early for us. Carole, good morning to you. So Bayrou went on a term offensive the last couple of weeks. He wanted to win over some lawmakers unsuccessfully. So in all likelihood, it does actually seem like this government will lose the confidence vote. What's next?
The charm offensive hasn't paid off, Jumana, and in fact, just 9 months after the fall of Michel Barnier, we are very likely to see tonight another fall of the government with François Bayrou really likely to lose his vote of confidence. 98% chances according to Polymarket. What happens next is now in the hands of President Macron. The most likely scenario is that he names a new prime minister. Some within his own camp are saying he should do that really quick, hopefully over the next few days, and not wait for many weeks like he did in the past. So we should see the 5th prime minister in France in less than 2 years. What route is he going to go? Perhaps he could go the technocratic route, or perhaps he should try the socialist, the moderate left, which he hasn't tried yet. However, he risks losing the support of the moderate right, the Republicans. The current Interior Minister, Bruno Retailleau, has said that if the socialists join the next government, it will be without him. Of course, other options for Macron include calling new snap elections or even resign. Two options he has currently ruled out. So we're going to see probably the fall of Francois Bayrou, a new prime minister, but hopefully not snap elections over the next few days.
I mean, the catalyst for all of this is Bayrou wanted to shore up support for his budget proposal, around 44 billion euros in spending cuts. How would a likely successor to this government perhaps approach that differently, given how divided the French electorate is right now? It's very difficult to appeal to all your different stakeholders, especially given the fragmented nature of the French parliament these days.
The irony of this, of course, is that most of the French and most of the opposition parties actually agree that there is a debt issue in France, that we need to tighten public finances. The problem is that they don't agree on the method used by Francois Bayrou, which was to call this vote of confidence before any discussions on the details of this budget. The issue as well is that if he does name a socialist prime minister next, they have proposed an alternative budget which includes 22 billion euros of savings, which is only half of what Francois Bayrou was proposing. So clearly that is a concern for the markets. The fall of Francois Bayrou is mostly priced in. However, the debt trajectory is not quite yet priced in, and clearly the next government will also have to work on that and also revive confidence. We've seen the French really increase their savings over the past few months, which means the money is not really flowing into the real economy. And according to Bloomberg Economics, if this debt trajectory is not solved, if nothing is done to actually reduce the deficit and bring it to the 3% target in 2029, which is the goal of this current government, then the debt to GDP ratio could actually increase by about 10 basis points from around 115% today to 125% in 2030. That's according to our own Bloomberg Economics. So a lot at stake here, and there is a deadlock. So perhaps if the fragmented parliament remains the way it is, Macron might be forced in the end further down the road to indeed call new snap elections.
Caroline, thank you so much for helping us make sense of all the complexities of French politics these days. Caroline Conat, outside the National Assembly in Paris. Well, BRICS leaders are set to meet virtually at Brazil's request to confront Trump's new trade tariffs. While Presidents Xi and Putin have confirmed they'll take part, Indian Prime Minister Narendra Modi plans to skip the meeting and send a senior representative instead. Our chief Africa correspondent, Jennifer Zabazaja, joins us from Johannesburg. Well, last week we were talking about the fact that President Trump was tweeting a bit scornfully about this Tianjin summit in Shanghai with many heads of state represented. You've got to wonder what really these BRICS nations are doing hosting a virtual summit, much to probably will likely be President Trump's irritation.
Right, Jumana, and many analysts noting potentially we're seeing President Trump actually bringing a number of these BRICS nations closer together. Of course, as you noted there, we did see that Tianjin meeting just a few days ago where we saw a number of these leaders talking about ways in which they can strengthen development institutions and also help support the global South. Now, Bloomberg are understanding, as you were just mentioning there in the intro, we'll see President Putin in this virtual summit and also President Xi Jinping expected to give a key speech on U.S. trade policy. And actually a readout that we did get from Foreign Minister Wang Yi is that China wants to strengthen strategic coordination, uphold international rules, and safeguard common interests of the global South. Surprisingly, though, Jumana, as you were mentioning there, of course, Narendra Modi not expected to be present at this virtual summit, instead sending a senior representative in his place. And what's important to note about this is Modi and President Trump's relationship has been in the spotlight for the past few months. Many people actually saw potentially their closeness earlier this year at the BRICS summit being a stumbling block to any sort of resolution that the BRICS leaders can get. Now, of course, we've seen frictions between India and the U.S. And so did potentially this relationship go into Modi's decision not to attend personally and instead send a senior representative? But the question, too, will be what, if anything, readout will we we get from these leaders in this summit? And what then does it mean for the relationship with a number of these countries and the U.S. and President Trump?
Yeah, what about the BRICS? I mean, you touched on this a little bit, and I'm curious to see whether there actually have been signs that the BRICS, inter-BRICS relationship has been strengthened given all of the events over the last couple of months and the global south sticking and becoming more homogenous as a group in light of some of the decisions taken by the Trump administration.
Right. Well, Jumana, if you take a look at just a few of the decisions taken by the Trump administration, let's just start with tariffs, of course, right? If you look at a number of these BRICS nations, South Africa has 30% tariffs, Brazil, India, China also facing upwards of 30%, upwards of 20% tariffs there. This has been a significant hit for a number of these economies. Not just that, we have seen President Trump verbally threaten these BRICS nations for any sort of moves away from the dollar. And so it's seeming like there seems to be a bit more closeness that is being developed between these nations. But what, if anything, can they do with that, of course? Because, of course, you know, if we just take a look at the G20, for instance, we heard from President Trump over the weekend that he is not going to be attending the summit that is happening here in South Africa, instead sending Vice President J.D. Vance. But still, the U.S. will take over the G20 presidency next year. And so there still needs to be some sort of working in between that is happening between a number of these nations and the U.S. So the question will be, will we get a readout again? And how will these nations individually work on their bilateral relationship with the U.S.? Because that is, of course, still important to these economies individually.
Yeah. Jen, thank you so much for the overview. Jennifer Zavazaj, our Chief Africa Correspondent in Johannesburg. And coming up, we speak to Amira Sajwani, founder and CEO of property tech firm PRYPCO, about securing a bridge funding round next. This is Bloomberg. Dubai-based property tech platform PRYPCO has secured pre-Series A funding from U.S. venture capital firm General Catalyst. As sole investor of this bridge round, General Catalyst is making its first prop tech investment in the Middle East. Now, the VC firm's other notable investments include Stripe, Deliveroo, and Kayak. PRYPCO is a real estate platform that aims to make property investment, home financing, and residency more accessible. Joining us now is founder and CEO Amira Sajwani. Really good to have you on the show with us. Look, just a 1-minute summary. What does PRYPCO do for the audience who are unfamiliar with it?
That's a great question.
Become a real estate platform that caters to the end-to-end needs of anybody purchasing a real estate property or even transacting a property in Dubai, whether you're a broker, you're an agency, or you're a client. And so our main offerings right now are fractional ownership. We allow ownership into Dubai real estate from 2,000 dirhams. And how we do that is by subdividing the property into many pieces and selling it out. And then we also do home financing. So we do mortgages, and we are partnered with 18 leading banks in the UAE. And we've disbursed more than 10 billion dirhams over the last 2 years. And so we're very strong in mortgages. And then we also do golden visas.
So I want to ask you about fractional ownership, because essentially, I mean, we talk a lot on this show about the booming house prices, residential, commercial, everything in Dubai, the UAE more broadly. And yet this concept of fractional ownership is where you can participate in some of the upside, the capital appreciation, the rental yield, income, but you don't actually fully own a property, hence why it's fractional ownership. Why is this concept taking off, do you think?
I think that's a great question. The concept is taking off because everybody wants to be exposed to Dubai's market. Dubai's market's doing phenomenally well. The rental yields are amongst the highest globally still till today. The average yields are still, between 6 and 8% net on your investment, as well as opportunity of capital appreciation, which has been more than 25% in the last couple of years, year on year. And so people are very excited about the market. And of course, like any other market in the world, there's a barrier of a minimum price to enter into purchasing into the real estate market. And so fractional ownership breaks down that barrier. It allows for people to enter from, a very small ticket and have that exposure to both the rental yield as well as the capital appreciation.
But does it not raise the risk of what's happening in Dubai moving into speculative territory? Because you have people punting.
That's a great question. Actually, fractional ownership reduces that risk because with fractional ownership, what you're purchasing is upfront. I think with speculative, when speculators come to the market, they look to buy something and flip it over time and take a payment plan or take leverage against it. With fractional ownership, actually, it's a pure investment. There's no leverage against that investment. And so the risk is actually much lower. It's a good yielding product. And so you get that dividend as well monthly or annually or quarterly according to whatever is the setup for that property.
Yeah, and you took this concept of fractional ownership and took it to the digital format, a tokenization, very interesting event that you had in the summer. Essentially, you sold a tokenized villa in under 5 minutes, attracting more than 224 investors from over 40 nationalities. Is this a template that you think is going to take off, people buying into tokens in digital format?
I think tokenization, a lot of people ask, what is tokenization? Tokenization is just digitizing the entire process of allowing any asset, and in this case real estate, to be broken down into many different classes or many different smaller shares. And so tokenization makes the process a lot more efficient and a lot quicker. And it was a phenomenal experience. We were partnered strategically with the Dubai Land Department for the pilot program. And so it really took off. There was a large appetite for it. And so fractional ownership really is something that people are looking into because, today people who are even working and putting away savings, they want to be able to put a monthly amount into something that yields them as an investment. And so it's a great option today.
So let's talk about the other main news, which is that the General Catalyst, which is the global VC firm, has investors putting in money into your company. First of all, can you give us any details on valuation at this point?
So we haven't disclosed the valuation, but it's been a very good strategic partnership. We are their first prop tech investment into the region, and they've done very few other investments as well. So it's a really strong signal for us on our stability and growth and where they're looking to the region going, as well as us as a company. And so we're very excited. We've just onboarded them over the summer as strategic partners with this investment, and we're really going to double down on our products and heavily focus on growth.
Where are you going to deploy capital?
That's a great question. Capital is going to be deployed to solidify where we are today as well as grow across both mortgages and fractional ownership. We're really looking at the market that has a lot more breadth than we're currently capturing, not just us, but as a full ecosystem. And, His Highness as well over the summer has announced the PropTech Hub that they want to take that 5x by 2030 and go up to about up to a $5 billion market. And so that's phenomenal. Dubai is really focused on growth across the sectors, and we're excited to be part of it.
Thank you so much, Amira Sajwani, founder and CEO of PRYPCO, on our show. Well, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. And coming up, a deadly Ebola outbreak grips Congo. At least 15 deaths have been reported so far, with dozens more feared infected. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The Democratic Republic of Congo declared an Ebola outbreak late last week after 28 suspected cases and 15 deaths were reported. Health services in the country have been under strain this year as the U.S. government cut funding for international aid. For more, Bloomberg's Onziro Ganga joins us now from Kigali, Rwanda. First of all, just walk us through how severe the new outbreak is and how much of a cause it is for alarm.
Hi, Jumana. So it's quite severe, and we're seeing joint effort between the government of the Democratic Republic of Congo and the WHO to try and contain these outbreaks before they spread further and become something that is not mitigatable within the power and the resources that the government has. So far, this strain has been identified from the latest test is the Zaire strain, and it's one of the more deadly strains. It has a fatality rate of about 20 to 80%. It has a high infection rate between people people, and also due to the geography and movement of people, it is increasing the risk of infection. The first patient, the patient 0, was an expectant woman. She was admitted, and 5 days later she lost her life, together with the first healthcare workers who were the first point of contact. But the government says that the good news is they have a vaccine, and they're going to be deploying those 2,000 doses to the contact people that have had any form of connection with those that have been diagnosed with the disease, and also frontline healthcare workers. This is not the first time this is happening in Kasai region. This is the second outbreak, but in DRC, over 15 outbreaks that have claimed over 15,000 lives.
Ondiro, in the intro to you, we were talking about some of the funding aid and the withdrawal from some of that aid out of the U.S. administration. Is that impeding Congo's ability to effectively deal with this outbreak right now?
Absolutely. We have seen extreme budget cuts from the U.S. going into sectors like healthcare and Democratic Republic of Congo, and this is having an impact on how they're dealing with outbreaks from cholera, measles, and mpox. And Ebola is not going to be any different, because a lot of funding came from CDC and USAID, and this is money that not only went into helping run healthcare services, it also helped in technical and expertise training of Congolese medical people. It also helped in buying medical supplies, and that rug having been pulled under their feet is going to complicate effort. Congo is also a country that is at war. A third of their budget is going into that, and so this is further straining money that could go into social spending, and it speaks to some of the budget cuts that have gone into global health, and with that then it constrains effort. We are seeing WHO stepping up, but without synergized efforts, this is going to be a problem. However, on the upside, we are seeing that in 40 years, Congo has become very good at sequencing the disease and just response efforts.
Bloomberg's Ondiro Ganga in Kigali, Rwanda. Thank you for bringing us that all-important story. Well, that rounds up our show for today, Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.